Stephen, we were just saying that speculation about what OPEC Plus may announce this week is really driving oil prices. I feel like there's been a lot of back and forth and confusion over the past 2 weeks over whether there's going to be production increases or production cuts. Speculation of both has really appeared in the market. Why is there so much uncertainty over what OPEC Plus does next?
Yeah, it's a great question, Scarlet. There really shouldn't be any uncertainty. What we do know is that OPEC does follow the spreads, the formation of the forward curve intently, and that factors greatly into their decision-making process. So that said, what we've seen now over the past month and a half is a market that has moved from a backwardation, a strong backwardation, and that simply means the price for the first contract of oil is greater than the second month out contract, and that tends to be a more bullish signal. But what we've seen over the past month and a half is that situation go into contango. That is to say, last week, the December NYMEX crude oil contract expired at a discount to the January contract. Today, the January contract is now trading at a discount to the February contract. So this is a clear signal to OPEC that they should be cutting production, because what is happening now is that fear in the market, which was rampant in the first half of this year with inventories, global inventories, not enough inventories out there. That narrative is now changed to a supply side where we have too much supply, and OPEC is incentivized now to cut production.
How fast can they make that pivot? Because it seemed like just a few weeks ago we were talking about the potential of just the opposite when it came to OPEC Plus.
Yeah, there was a lot of, right before the holiday, I know there was a pretty cryptic tweet out there. The Wall Street Journal put out a report of supposedly saying that OPEC was going to increase production. And of course, prices tanked right before the holiday, but in the same day, just like today, prices rebounded when Saudi Arabia came out and said, no, we are not adding production. And it really did not make sense from a seasonality standpoint that OPEC would be increasing production at this time of the year. So I think when we look at more of the seasonality, we are going into the weakest demand part of the season. Refineries are going into their maintenance, or we're going into our winter demand when these production cuts will come forward. So I think a production cut is in the cards when the producer group meets again.
So one thing that triggered the recovery in oil prices today was Eurasia Group saying that if crude falls much below its current level, then OPEC Plus would seriously consider a new production cut. Is there a specific price level or trajectory that would trigger OPEC Plus to take that action?
Well, from a modeling standpoint, which is what we do here at the Schork Group, we're at the bottom of the market, at least from what we are at that upper quartile of just how low we think prices can go based on what we're seeing from a volatility standpoint. So from a modeling standpoint, yes, I do think we are plumbing the lows, as it were, at this point. At this point, $70 is a psychological number. I think certainly if we do get a big push below $70, and keep in mind, this is theoretically where the Biden put is, right? This is the signal that the White House has put out that oil gets to $70 a barrel. We're going to start replenishing the Strategic Petroleum Reserve. That's a 200 million barrel bid right there at $70 oil. So I think the signal to OPEC is, well, if we, even with that put being out there, if we go below $70 a barrel, I think that will raise the hackles in Riyadh, let alone Moscow, of course, and certainly will prompt a production cut, even increasing the odds of a production cut in the cards.
Yeah, still a lot of questions about where the Biden administration is going to find that oil, and I'm not sure that Venezuela deal is going to do much as far as impact. I do want to get your thoughts here, Stephen, about what's been going on in the natural gas space, because we had that big rally earlier this year, and I know it's come down significantly here, but there still seems to be a lot of strength there, at least strength in favor of the producers.
Yeah, absolutely. Natural gas is a very strong market, to your point. We had a tremendous run up in the natural gas market. And in fact, in one day in August, we hit $10 a decatherm. We haven't traded $10 decatherm natural gas on the NYMEX since 2014. But in that same day, Romaine, we went from $10 down to $9 because we have a major export facility, the Freeport LNG facility, that's been down. So the natural gas market is now waiting. When is this facility facility going to come back online. Speculation now is we'll be up and running at the end of this year, partially rerunning, and we'll be up and running full-time by the end of the first quarter. So it's a very bullish picture at this point. We had a nice downdraft in September and October natural gas prices because this is the refill season. This is when we put all the gas into the ground ahead of the winter. We had the strongest ever end to a refill season. We put in 173 MMBTU or BCF of gas into the ground. Never did anything like that, and that weighed on prices. But guess what? We had a really big bullish report last Thursday. We're going to get another big bullish report this Thursday. So we've gone from a very strong end to the refill season, which is bearish, to a very strong start to the delivery season, which is now a bullish scenario for natural gas. So still very long-term fundamental bullish in that market.